So nationally right now, we're at about 3.5 months of supply, okay, of inventory on the market. That number's been going up the last 12 months nationally, okay? We were at like 2 months of supply, 1.8 to 2 this time last year. Now we're at 3.5 months of supply. So that's like double. So you hear that inventory's doubled. You might have, maybe as a listener here of 94.9, you've heard that number thrown out there nationally. Inventory has doubled since last year. Well, we were at 1.8 months of supply, and yeah, going up to 3.5 months in a lot of markets very quickly has impacted sellers. Okay, there are some markets like Boise, Idaho. It's down 16%, almost, trending on closer, going down 20% on home values. Well, guess what? It went up over 50% on the home values the last 2 years. Phoenix, Arizona is one of those markets that's gone down 10%. Austin, Texas, down 10% in home values, right? And this pop in inventory in those markets has certainly spurred that, as well as the interest rates. So when we hear inventory doubled, and I just told you before the last break that we're at the low point in inventory in Connecticut, it's because the inventory story here is much different than the inventory story in the rest of the country. Chaz, where are we at right now for months of supply in Connecticut?
So for single family homes for months of supply, we are at 2.1, and I was doing a little bit of research. So for December, November, and October, we were at 2 months of supply, excuse me. So we did tick up to 2.1. But if you go all the way back to April of last year, we haven't been above 2.1. So in the last 10 months, we've been at 2.1 or 2.0 months of supply for single family homes in the state of Connecticut. So we have not seen any growth. I mean, I guess if you can call 0.1.
That's a year over year look. If you look at just January for single family homes, it's actually 1.6. And so that's the number nationally here that I was looking at, was a January number, 3.5. We're at 1.6. Wow. So we're 2 months behind the national average on inventory, which is creating a perfect environment. It's creating a longer last call for sellers in Connecticut. But don't get it confused. This is last call if you want to get peak pricing. This Q1 right now is last call. And by the way, you can connect with us if you've got questions about how to position your house to the market and make the most money possible. OneTeamCT.com, OneTeamCT.com. Or you could email myself or Chaz, CHAC, or Byron, BYRON, at OneTeamCT.com. If you've got any questions about positioning your home for the most money possible. But this is last call. Anybody that's thinking about selling in the next 24 to 36 months, this is going to be last call right now to get the prices of yesterday, meaning the peak. Okay, so Chaz, you ever gone to the bar and they're like, last call for alcohol? I know you don't drink that often, but...
No, they back in my heyday, back in my day, I'll make myself sound old. But yeah, they turn the lights on. They usually play an iconic song that's, related to the bar. And
what song would you
Closing Time, Semisonic. That's the first one that popped in my head. You ain't got to go home, but you can't stay here.
Okay. So this is what that is right now. You can get one last good drink in you before the hangover is coming. And I promise you, if you've been listening to the show the last couple of years, I say, hey, we're looking really good. We're looking really good, right? Well, now I'm telling you the hangover is coming.
Mm-hmm. It's got to. I mean, we've just been at such a critically low point in terms of inventory while home prices have continued to go up. I mean, our average days on market is down year over year to 22%, call it 23%. So, we're just continuing to see down. And all of a sudden, the catapult is going to go way back up, and there's going to be this influx of inventory. And we've already seen the 6.5% interest rates have slowed things, but they haven't stopped it. So if you are planning to sell, I mean, what would you say, Byron? Next 6 months is your prime opportunity before we start to go back down?
Next 6 weeks is your real opportunity. We're sitting at 1.6 months of inventory. Seasonally in March, that number starts to go up. I think the next 6 weeks would be your best opportunity. Listen, here's the reality. quarter one is probably going to be if we're just talking about price and not personal needs, quarter one is the best time to be a home seller in the state of Connecticut. Quarter four is the best time to be a home shopper, a buyer in the state of Connecticut. If we're just talking about dollars, like how do I make the most dollars or how do I save the most dollars on the other side? So those are opposites. That being said, we know buyers shop in the spring. And so for home sellers out there, if you're thinking about selling next 12, 24, 36 months, wow, the opportunity right now is so good for you. And we're seeing that reflective in the market. You know, in a lot of case-by-case situations, we're seeing multiple offers again, which we didn't see in October, November, and December. So waiting until later in the year, you're just going to have less of a seasonality push. Here's where I'm telling you the hangover is coming. This is from the Federal Reserve meeting notes just this past week. They were released from the meeting back in January 31st, February 1st. That was before all this hot inflation data of the last 3 weeks started getting dumped on us. And this is where it was their tone 3 weeks ago before all of that hot jobs report and all these other hot reports that we've seen now in the last 3 weeks. This was their tone 3 weeks ago, which gives us some indication of how they feel about, you know, what they're going to do with the federal interest rate in another 3 weeks moving forward when they meet again, and how they feel about real estate. This was the most bearish sentence in the 13-page PDF that they released. The staff judged that asset valuation pressures remained notable. In particular, the staff noted that measures of valuations in both residential and commercial property markets remained high, and that the potential for large declines in property prices remained greater than usual. Okay, so they're telling you your valuations are high right now. If you're in Austin, Texas, you're like, well, it's not as high as it was because I just lost 10%. If you're in Boise, Idaho, you're like, it's not as high as it was because I just lost 16%. Well, you're still up 30% from the last 2 years. So your valuations are high. The thing about Connecticut is our valuations are high and you haven't lost that 10% yet. Right. So you're at the very top still. And it's last call, because what the Fed is saying and what they're going to do with their actions, and you've seen it here as of late with the 10-year popping up and where we're 7% interest rate. What the Fed is telling you is that the potential, and we know when this happens, it's going to take a year, 2 years, 3 years to recover when this happens. The potential for large, their words, not mine, declines in property prices remained greater than usual. Okay, so if you're a home seller in the next year, 2 years, 3 years, I think it's last call to get that peak price.